Hello investors. I recently read that Vijay Kedia is quite bullish on the hospital sector right now. Apart from this, you might be aware that many well-known mutual funds are adding Max Healthcare and Narayana to their portfolios. And the reason behind all this is that the hospital sector is currently going through a very good growth phase and a strong capex cycle. Sales are increasing, meaning more and more patients are coming for treatments, and the profits that these companies are earning, they are using that money to buy or construct more hospitals, or in other words, for expansion. Also, hospitals are a very defensive business. So in today's video, special video, we'll do a detailed analysis of this sector. We will understand what are the key strengths and weaknesses of the sector, and along with that, we will analyze all the listed companies which are there in India. This will be the most interesting part of the video, where we will separate the top, average and poor businesses. So without further ado, let's begin. India's overall healthcare sector is currently growing at 11% CAGR. This includes both private hospitals and government hospitals. Currently, government hospitals hold a 30% share in the entire sector, and this has been continuously coming down, meaning private hospitals have been grabbing market share from the government hospitals. It is estimated that in the next 2 years, their share will come down to 27%. Now, apart from this, 70% of the business of hospitals comes from the inpatient department, meaning where patients need to be admitted. The remaining 30% share comes from the OPD, or basically consultations, like when you go and see a doctor and you return back to your home later. So even though the sector is growing at 11% CAGR, private hospitals are gaining market share from the government hospitals. So if we look only at the private segment's growth, it increases to 12 to 15%. So first thing is, there is good growth in the sector. Now, where is this growth coming from? So there are several triggers. For example, post-COVID, people have started taking health issues more seriously. Also, more people are buying insurance than before. And when people have insurance, they prefer going to a good or a large hospital for treatment. And government's Ayushman Bharat Bima Yojana has also contributed to this growth. It has brought insurance access to low-income people as well. Besides that, incomes are rising, lifestyle related diseases are increasing. So these reasons are also contributing to the growth in the sector. Now let's quickly look at the strengths and weaknesses of this business. So first of all, hospital is an asset heavy business, meaning a lot of money is required to buy or construct a hospital, for land, for building, and for all the expensive machines that have to be put up there. And if you are constructing a new hospital, then it will take you at least 3 to 4 years from choosing the location to constructing the building and getting all the approvals. And for the hospital to become profitable, it will take another 2 to 3 years, because patients don't start coming from the day one, right? It takes time. So this is a risk, because there can be delays in construction or commissioning of the project, as that will delay your expansion plans. However, due to being asset heavy, you also get the benefit of operating leverage. What I mean here is, the running cost of your hospital remains the same. So if your sales grow 15% or 20%, your net profit can grow faster at 25-30% rate. So that's your operating leverage. Plus, this is a defensive business. That's another strong point. Now we'll talk about companies. But before that, I will take just 2 more minutes from you to explain some key terms related to hospitals. This will help you to understand these businesses much better. So the first term is occupancy rate, meaning how many of your beds are filled or occupied. So if you have 100 hospital beds and on an average throughout the year 50 remain occupied, then your occupancy rate is 50%. The industry average is around 60 to 65%. Most hospitals operate around this 60 to 65% occupancy. But it's not like if a hospital company has low occupancy rate, it is bad. Because if your hospital was recently opened or you have added new bed capacity, then for some time the occupancy rate will decline or it will fall, right? Because marketing and filling those new beds will take time. The next important term is ARPOB, or average revenue per occupied bed. This tells us how much revenue a hospital earns per day per bed. For premium hospitals, this is above 50-60,000 rupees, as most of their business comes from insurance companies or cash paying customers. But for hospitals under Ayushman Bharat, this number is lower. Finally, one more thing before we jump on to stocks. So see, growth in business can come in two ways. First, you increase your occupancy. If last year you treated 100 people and this year you treated 110, then that 10% increment is your volume growth. For that, you'll have to keep adding new hospitals from time to time, because once a hospital reaches 60, 65, 70% occupancy, you can't expect more growth from that hospital. Basically, if your hospital has matured, you'll need to open a new one if you want to grow. The second way is you increase your rates. So even if occupancy remains the same, your sales and profits will go up because you have raised your treatment costs. What happens is, in a good hospital business, is that they increase rates and also add new beds regularly. Both things are important. So if a company is adding beds at 10% CAGR and is also raising rates at 10%, we can expect sales will grow at approximate 20% rate. That's about the key terms now. The first business we will look at is Jeena Seekho Healthcare. This company runs Ayush hospitals where people go for naturopathy, Ayurvedic, and yogic treatments. Some of you may say now that this can't be compared with other hospital companies, but look, it is what it is. If you don't want to accept it, don't. They run hospitals, the business is good, and growth is strong. That's why I have included it here. Jeena Seekho has a total of 50 hospitals. They currently have a capacity of 1600 beds, which they plan to increase to 3000 by the end of this year. That's a strong 88% capacity growth. This is the fastest growing business on our list in FY25. Their sales grew by 45%, and for such a high growth business, its current valuation of 60 PE is good, I think so. And yes, if you pay attention, you will notice that we are not focusing on profit growth for any of these businesses. Our focus is more on sales growth and bed capacity or volume growth. The simple reason for this is that almost all companies in the hospital sector are doing capex for opening new hospitals. So in the short term, margins will remain under pressure and net profit growth won't be that impressive. Now coming back to Jeena Seekho's business, its business model is slightly different. You will notice that their ARPOB is comparatively lower. It is 8,200 rupees. Its market cap is 3,500 crore rupees. So the base is quite small, which is another advantage Jeena Seekho has. Now see, Max doesn't have this advantage. Its market cap is 1,20,000 crore rupees. And what happens is, as a company becomes larger, it gets difficult to keep growing fast. Still, Max is a very good business, honestly. Despite being so large, it is growing fast. It currently has 22 hospitals, and most of them are in metro and tier 1 cities. That's why you will notice that its ARPOB is much higher, 74,000 rupees, which is the highest in the entire sector. And in a way, this is also Max USP. They will use the best machines, they'll get the best doctors and top quality treatment for you. But for that, they will also charge a good rate from you. Max's high ARPOB also tells us that their customers are largely insured or cash paying. Now, if you look at the growth, their sales increased by 30%, which is very good for such a large business. They currently have 5,100 beds, which they plan to increase it to 9,000 over the next 3 to 4 years. That is 18 to 20% CAGR volume growth, which is excellent for such a large company. Just think yourself. I mean, how many companies are there right now with a market cap of over 1 lakh crore rupees and they are growing above 20% rate? That's why Max not just tops in the hospital sector, but it is also one of the best large cap businesses. Their management is very, very serious about growth. Wherever they see opportunity, they are buying hospitals, whether it be buying land to construct new hospitals or acquiring an existing hospital and bringing it under the Max brand. But the issue here is that its PE is high, which is over 100. The company is in expansion mode. It is opening new hospitals aggressively. So there's no strong EPS growth yet. Because of this, Max PE will remain high. So you need to keep this in mind. Still, for a large cap, that high PE is somewhat acceptable, I think so. Now, the third business that we will study is Yatharth Hospital. It is doing quite well. It has 5 hospitals in Delhi NCR with a capacity of approx 1600 beds. And in this June quarter itself, their 2 new hospitals will be commissioned, which they recently acquired. Their target is to reach 3,000 beds by FY28, and that is impressive 23% volume growth. Their model is a bit different, though. You will see their ARPOB is 30,800 rupees, which is less than even half of Max. That is because most of Yatharth's patients come from government's Ayushman Bharat scheme. And that is why it is very important to understand the business. You can't just look at ARPOB or occupancy rate and call a hospital good or bad. Yatharth sales grew by 31%, so the growth is there. Plus, it has two additional advantages. One, its base is small. It is a small company. Second, its PE is low, just 40 right now. So there is also scope for PE re-rating. PE re-rating, you can understand it this way, that the market is giving Max a PE of over 100, while Yatharth is getting only 40. But if Yatharth keeps delivering strong sales growth, then the market will start giving it a premium PE as well. But for that to happen, Yatharth will have to deliver better sales growth than Max, or the pace of growth of Max will have to come down, because as long as the sector leader keeps performing so well, the market won't give much importance to smaller companies. Now let's move ahead. The fourth fastest growing business that we will look at is Krishna Institute of Medical Sciences, or KIMS. Although their sales growth was low in FY25, but still it will remain in focus going forward. And the reason behind this is that other companies are still in the process of investing, or they are doing capex, meaning they are still in the process of opening hospitals. But KIMS has already completed its capex and has opened hospitals. Recently, capacity has gone live, and in addition to that, this year too, around 1500 more hospital beds will be added. So KIMS has the advantage that its capacity is coming online back to back over the next 2 years. That's why you will see their occupancy rate is low right now, just 50%. That doesn't mean the company is bad or only half of the beds are filled. On the contrary, so many new beds have been added, which is why the occupancy rate has dropped. From here on, the occupancy rate will gradually increase, and from that, the business will eventually grow further. Now, look, hospitals is just one sector. If you want to build a good portfolio, then you'll have to cover different sectors, and within them, you'll have to study the best businesses. You can't expect much from just any random company you come across. That's why we have created a personal WhatsApp community for serious investors, where we closely track more than 100 good quality stocks of different sectors. We cover their business models, valuation, risk factors, how their results have been, everything in detail. Here I also share my portfolio, and I am there to clear all your doubts on one-to-one level. But yes, we do not give any buy sell calls on any stock. We are not SEBI registered. So if you are interested, you can send me a WhatsApp message on this number. Otherwise, we have also given a link in the description. You can message us using that link. And remember, this is a paid community with a monthly fee of just 850 rupees. Meaning, for just 850 rupees per month, you are getting to know about so many good quality stocks. And yes, there are two plans, 6,000 rupees for 6 months and 10,000 for a full year. In the 6-month plan, your per month cost will be just 1,000 rupees, and in the annual plan, it will be even lower, just 850 rupees. So if you are interested, you can contact us using the link below and you can join this community. Now, the next company we will look at is Rainbow Children's Medicare. They have 19 hospitals in Delhi, Hyderabad, Chennai, etc. And as the name suggests, they specialize in children's treatment, pregnancy, delivery, and fertility. Rainbow is basically a premium hospital in this segment. Like if someone wants delivery of their child, Rainbow will provide a premium luxurious room. But the issue here is the business is not showing good growth. Their sales increased only 17% last year. And what's more, the volume growth is not that good. Their occupancy rate has increased just 5%. So from 17% sales growth, subtract 5% volume growth, the remaining 12% growth has come only by increasing rates. Though all private hospitals are rapidly increasing their prices, even then the business, I think, should at least show good volume growth, right? Like if there were 100 patients last year, then this year at least 115, 120 should come. That 10, 15, 20% volume growth should be there. And then the growth from price hikes would come on top of that. That would be even better. Before its IPO, Rainbow, I think, used to grow very fast, but now that spark is missing from its business. And going forward too, their goal is to just add beds at a 10% CAGR. If we assume 5 to 10% RPOP growth on that 10%, then Rainbow becomes a 15 to 20% type hospital business. And its PE is also very high, around I think 60 for such low volume growth. So in my opinion, Rainbow is not that good. After Rainbow, we have Global Health, which operates hospitals under the Medanta brand. Medanta has shown just 13% sales growth. They are adding 2 hospitals with more than 1,000 beds in Mumbai and Noida. The Noida one will start operations soon this year, but the other one will take time. And after these two facilities, their other plans are long into the future, and that is the problem. Till Max and Global are two great examples in the hospital sector that have created great wealth for their investors. Max's IPO came in 2020 and Global's in 2022. Max has given 1000% rally in the last 5 years, and Medanta 200% rally in just 2 years from 2022 to 2024. But now the problem is valuation is high and growth is weak. Also, Medanta has not raised its rates much. Their management says they don't want to become a burden on patients. So that benefit is missing for global health. There is neither volume growth nor value growth. But if they decide to raise prices in the future, then it can be a trigger for the business. Next is Jupiter, which has just 3 hospitals in Pune, Thane, and Indore. Jupiter is also a good premium chain, but again, there is a growth problem. Jupiter is constructing 2 new hospitals, but they will take a lot of time to start. Their strategy has always been to construct their own hospitals. In comparison, Yatharth is better, I think. They constructed some hospitals and also bought a few already built ones. Jupiter currently has a capacity of 1000 beds approx, which they aim to double in the next 5 years. And by that time, these hospitals will actually just get completed. Then it will take them another 2 to 3 years to become profitable. So Rainbow and Jupiter both face the same problem. There is such strong growth in the sector. Their large cap counterpart, Max, is growing so rapidly. But despite being small cap, these two are not able to do much. After this, there are 3 businesses: Apollo, Fortis, and Narayana Hrudalaya, which we will quickly look at together. The problem with Apollo is that it has become so large that it is not able to grow fast. It is like an elephant now. So just like Max, its market cap is also more than 1 lakh crore rupees. But unlike Max, Apollo is showing only 12 to 15% volume growth. Meanwhile, Max is increasing its bed count in the 18 to 20% range. Similarly, Fortis has sales growth similar to Apollo, which is 13 to 14%, but their future growth plans are even weaker than those of Apollo's. They plan to add beds at just 10% CAGR. Then comes Narayana, and we can club it with these two as well. Sales growth is nothing special, just 10%, and even going forward, their target is to increase capacity at just 6% CAGR. Narayana has 2 upcoming hospitals in Bangalore and Kolkata, which will take time and will start in 3 to 4 years. All the hospitals they have in India are matured. There's no growth possible from them. They did expand in Cayman Islands, but that contributes only around 20% to their sales. Plus, not much is happening over there. So, there's no real growth in the business. Next is Aster DM, which is facing difficulty in raising its occupancy, meaning they are not able to attract new patients or customers at a faster rate. That's why you will see their sales growth is just 12%. Although going forward, they have a target to increase their bed count at a rate of 18%, but I wonder how that will help if they are not able to ramp up the occupancy. Apart from this, there are also talks of a merger between Aster and Quality Care, which runs care hospitals. But the issue there is that Quality Care is just a 12% growth model. So from an investor's point of view, there is not much benefit from that merger. Now, lastly, there are these 4 small businesses: Asarfi, GPT, Uni Health, and Kovai. GPT has no sales growth at all. Their goal is to increase beds at around 15%. But for such a small business, it is not something very exciting. In comparison, you have Max, Yatharth, and Kim's, which are, despite so being large in size, are doing much better. They are expanding at a much faster pace. Then there is Asarfi, which is again very small business with a market cap of less than 300 crore rupees. Although the growth has been good this year, but there are management issues. Also, they don't have any clear plans after the next 2 years. So in my opinion, there is no point in taking unnecessary risk here. Kovai's management doesn't do con calls with investors, so that's why I have rejected it, because it gets difficult to study a business without that. Besides that, growth is not much either there. UniHealth is both small and not growing, although their capacity is going live this year, so we will have to see. So overall, in my opinion, among large caps, Max Healthcare is the best hospital business. In small caps, Yatharth and Jeena Seekho are expanding their business very rapidly, and Krishna Institute is also good, which you can look or which you can study yourself. Now look, making this video took a lot of effort, a lot of time. So don't forget to give a thumbs up, and you can also subscribe to our channel. Your likes and subscribes are our only motivation so that we can continue bringing you this kind of research for free. I'll see you in the next video. Happy investing.